a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We are going to take a look back at the first quarter now and see how ETFs and sectors fared, what impact that first quarter activity has had on both, with our ETF strategist Eric Dutram, who joins me now from Zacks.com. So as far as the market is concerned, kind of flat in the first quarter.
Yeah, definitely very flat, pretty volatile, I think, for a lot of investors out there. We did see the S&P 500 kind of sneak by with a little bit of a gain. The blue chips out there, the Dow Jones, they slipped a little bit, and then the NASDAQ actually finished up about 3.5% for the quarter. So an okay performance for them. We did see the Treasury bills. We saw yields continue to decline. This is a little bit of a surprise, I think, to most people because, you know, we keep talking about yields or the interest rates possibly rising later in the year, but rates have actually been moving in the opposite direction. We've actually seen a pretty modest move here. Down to 1.93%, and actually today, here on April 2nd, it's actually down to 1.88, 1.89. So we're continuing to trend in the opposite direction here. And then kind of as a little aside, the top sector for the first quarter was healthcare. This was kind of continues the winning streak for this space. It continues to crush the market. It's had a little trouble here to start the second quarter, but definitely a nice trend for healthcare, and the worst performing sector was the utility space. And this was a very strong performer in Q4 last year, but you know, to start 2015, a lot of investors have kind of had enough of utilities, and they're sort of selling off some of these rate sensitive sectors, and that's been among the hardest hit.
Yeah, okay. Some of the other best performing include currency hedged ETFs, right?
That's been a pretty popular area for a lot of investors, and that's because the dollar's been so strong against a variety of currencies so far. Not just this past quarter, but the past 6 months, past year. It's really been a strong trend in the market. We actually saw the euro lose about 10% of its value against the dollar just in the last 3 months. Wow. So a pretty big move for, you know, major currency like that. We've also seen European stocks. They've actually been on the rise thanks to, you know, sort of this fall in the euro, and then also some more accommodative policies from the central banks, and, you know, hopes for some more stimulus. This has actually led to some great trading in the German hedged ETFs out there. These take out the risk of currency, so you don't have to deal with any of this euro drops or euro rising. And there's 3 ETFs in this space right now, and all 3 have added more than 21% just this year. So great performance for all these. And we've seen a couple of the other broader hedged products do really well. Also, HEDJ is another popular name in there. That was up about 15% in the quarter. So very strong performance if you were smart enough to hedge out some of your currency risk in the first quarter.
All right, clean energy had a rebound.
Yeah, this was kind of a surprise to me, I think. So oil prices have stayed pretty low, pretty moderate. I mean, they've rebounded a little off their low 40s level. Yeah. But, you know, there's still nothing great. And it's hard for a lot of clean energy products to do well in a low oil environment. But there's actually been some different trends here in the space. A lot of these solar companies are sort of getting together, collaborating on utility-sized projects, and that's kind of acting as a catalyst for some gains in the space. We saw TAN, which is the solar ETF, great ticker again right there. It was up about 30% in the quarter, and then ICLN, it's a broader clean energy fund, that was up about 23% in the quarter. So very strong performances here, a little bit of a surprise considering the not so great trading in the rest of the energy market.
All right, you know I pay attention to those tickers.
Well,
too.
How can you not, you know?
Finally, some China ETFs.
That's right. China, and in particular what is known as the A-shares market, it's a very closed off area of the Chinese market, and Western investors can't really access it, save for some of these new ETFs that have come out. And these A-shares have really stolen the show so far in 2015, and that's because of this new link that was set up between Shanghai and Hong Kong, and that allows more liberal trading rules for these China A-shares products, which are only traded in mainland China. And that's really opened up the market a lot, so it's created a lot more interest in the space. We've seen great performances out of a lot of these China ETFs that are focused in on this sector. Just take a look at 2 real quick. ASH, A-share small caps, it's up nearly 40% so far this quarter. And then CNXT, that was up about 50%. Unfortunately, these tickers are a little bit of a tongue twister there, but nevertheless, they've been great performers so far, and obviously they're going to be pretty volatile. So I'd definitely be on the lookout there. It's hard to say if that trend's going to continue, especially after this link was set up, and I think a lot of the investors who wanted to get into this space, you know, definitely got in. So maybe a little dicier trading there. Got to still like the currency hedge story, but clean energy is kind of a wild card, I think, for Q2.
If the ETF names are not a mile long, the tickers
Then they're
are
probably
hard
not
to pronounce,
ETFs, right?
Right? So go figure. Own either of these?
I do not.
All right. Check out more ETF commentary and other information in the ETF section of Zacks.com. If you're not there already on the website, all you need to do is get over to the home page and navigate to the ETF section using the Funds tab in the top toolbar. With Eric, I'm Terry Ruffalo.